Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, it's a brand new day, it's a brand new week, it's a brand new financial year as well. You know, we are poised to kickstart FY25 with a bang, given the fact that the GIFT Nifty is hinting at a fresh high. It's trading above that 22,530 mark. Remember, the fresh high on the Nifty was 22,526.6. So if the GIFT Nifty is anything to go by, we are poised to start FY25 with the bank. The index, of course, clocked in a 30% gain for FY24, and the mid-cap index, of course, surged over 60% for the financial year gone by. But, of course, lots to discuss today. You know, it's a busy week given the fact that the RBI will be, coming out with its policy decision on Friday. Auto sales figures coming in today. So, lots of stocks in focus as well. The likes of, OMCs, given the fact that they have cut commercial LPG prices after hiking it back in March 1st. But of course, if you have any stock-related queries, send them in to us on our YouTube feed. We'll try and take them up with our experts on the show. But before we move any further, let's take a look at the top headlines at this hour. Wall Street clocks its best quarterly gain since 2019, with the S&P 500 rallying over 10% in the Jan to March quarter. US stocks also notched a fifth straight month of gains in the month of March. Personal consumption expenditure, which is a key gauge for Fed, inflation gauge for Fed for February rises in line with expectations. Meanwhile, Asian markets also trade largely higher as China's manufacturing activity expands in March. GIFT Nifty trading above that 22,530 mark. Gold sparkles at record high to trade above $2,250 an ounce. Safe haven demand and expectations of rate cuts by the US Fed is fueling gains on the yellow metal. Meanwhile, crude prices stay above that $87 mark on expectations of OPEC maintaining its production cuts. D Street clocks phenomenal gains in FY24 with nearly 30% gains. Mid and small caps steal the show with over 60% surge. Now, this is the biggest return in the last 14 years, barring the pandemic period. All sectoral indices end in the green, with real estate, auto and PSU stocks leading the charge. Autos will be in focus as March sales figures will start trickling in. Momentum is likely to continue with car makers like Tata Motors, Maruti and M&M on track to report double-digit growth in volumes. Two-wheelers too are likely to remain in the fast lane. However, tractor sales may stay weak. All right, then let's take a look at the cues for trade. Then, of course, the Nifty spot closed at 22,326, up 200 points. Although it came very close, a stone's throw away from the record high of 22,526. It was 10 points shy of that, but in the last 45 minutes, we saw, some bit of selling kick in at highs, and the Nifty finally managing to end above that 22,300 mark. If you look at the volatility index, India VIX, that closed up 1% around that 12.8 mark, below 13. But of course, if we recap FY24, as I mentioned, 30% surge on the index. Sensex, of course, clocked in 25% rally in FY24. The mid-cap index soared 60% and the small-cap index as well soared over 65% or thereabouts. The top performers of FY24, Tata Motors, Bajaj Auto, Adani Ports, Hero Moto, Coal India, all these stocks gave over 100% returns in FY24. Three names out of these five names that I mentioned belong to the auto pack. So the auto pack, of course, has emerged as one of the key sectoral movers for FY24. If you look at the FNO series, in fact, FNOQs, April series, we will kickstart that series today. Nifty open interest was up 27.7%. It added somewhere around 23.1 lakh shares. If you look at the Nifty Bank Index, that also came off days high but managed to defend that 47,000 mark. Open interest was up 1.6%, added 52,170 shares or thereabouts. PCR at 1.18 vis-a-vis 1.16 levels on, in the month of March rather. But looking at the stocks that are in FNO ban, still in FNO ban rather, Z Entertainment and Hindustan Copper has come out of the FNO ban. If you look at the fund flows picture, FII's net bought shares worth 188 crore rupees in the cash market, and so did DII's. The buy figure there was just a little shy of 2,700 crore rupees. But on that note, let me bring on board our technical expert for today. Joining me is Aamar Deo Singh of Angelone. Great to have you on the show, Aamar. Given the fact that we gave up most of the gains in the last 45, not most of the gains. I mean, it came off significantly from the day's high in the last 45 minutes of trade. Do you think it's still a sell-on-rise market? And despite the fact that the GIFT Nifty is hinting at a start, around those record levels, do you expect sell-on-rise to play out today as well?
I would say that, overall, we have to understand that the broader, the large caps have been really holding foot. So small caps, we did witness a fair amount of profit booking and correction there. But large caps have been holding firm. And also, if you look at the long-term trend for Nifty, that I'm talking about the monthly charts, the trend, there is no change in trend. And there is not much decline in the momentum as well. So that puts the favor in favor of the bulls. However, having said that, from a short-term perspective on the daily charts, we've seen a lot of consolidation. Because if we go back and see, so somewhere in the first week of March, Nifty had made a high. And then again, from there, we witnessed almost a 500 to 600 point correction. Again, it's inching towards that high. So that tells me that there is definite interest there. And also global factors have also been very positive. Global sentiments, if you look at, you just spoke about the US markets and other markets as well. So the overall sentiments have been positive. And some of the data triggers also have not been, I will not say they've been positive, but they've been neutral to a certain extent. So that's really helping the markets.
All right. What are the levels you'll be watching out for on the Nifty Bank Index today, Aamar? 47,000, 400 is, where we went on Thursday, but we managed to shut shop above that 47,000 mark, even though we came off day's highs. So, particularly for this index, what are the levels you'll be watching out for? What is the key resistance level from here?
Yeah, Bank Nifty, if you look at Nifty, Bank Nifty has a long way to go because if we go back in time, so in the first week of January, it had made a high of almost 48,450 and currently it's around 47,400. So overall, and if I look at the long-term charts, that is, I'm talking about the monthly charts, there's not too much of strong momentum. I would say primarily HDFC Bank is one of the major heavyweights, so that's not really been doing much. Apart from that, if you look at the other banks, ICICI Bank, SBI, they've been comparatively better placed, Kotak and all that. So talking about the levels to watch out for Bank Nifty for today, first level I would say is 47,500 levels. That's a crucial zone of resistance. Anywhere between 47,450, 500, that's a zone of resistance. If that is taken out, then we could see a rally towards the 48,000 levels. On the downside, Bank Nifty has got a good support coming around the 46,950, 47,000 levels. So that's a range for Bank Nifty. And also, if you look at the data, so the data also tells me that there is some sort of bullish momentum there. So that's something which we can definitely look at Bank Nifty.
All right. Before I come to your picks, I just want to remind our viewers, if you have any queries, send them in to us. As I said at the start of the show, send them in to us with the hashtag, AskMC on our live feed on YouTube. We'll try and get them addressed by Aamar. But Aamar, before we move any further, share your top recommendations for today with us, and of course, also an F&O strategy, given the fact that we are kickstarting the April series today.
Yeah, so I would say the first stock to look at is Godrej Consumer Products. This is one stock I would say is in a strong uptrend. We've seen some sort of consolidation in the stock for the past, I would say, many weeks. But once the stock is able to sustain about the 1250, 1260 zone, that's a immediate zone of resistance. So if that is taken out, then the stock has the potential to rally towards the 1300 mark. So this is one stock one can definitely look at. The stock has got good support coming around the 1200, 1210 levels. The other stock to look at, excuse me, the other stock to look at is Torrent Power. This is one stock which is very strong, I would say, on all time frames. So be the long-term charts, intermediate term, short-term trend. We did witness the stock witnessing some correction last week, but overall the trend is very strong. Today also the stock is up by almost 5%, 4.5% as we speak. But this is one stock on any correction. This is a stock one can definitely look at. The levels to watch out for on the downside, where one can look at a buying opportunity, is somewhere around 1380, 1400. That's a good level to look at. On the upside, the stock has a potential to hit its all-time highs of 1500, 1515 approximately. So this is one stock one can definitely keep on one's radar.
All right, those are the recommendations from Aamar. But let's take a look at how the markets have, opened up. In fact, we've started FY25 on a sanguine note. The Nifty is clocking in a 150-point surge. 22,480 is where it's at. So, it could, in fact, make a dash at that record level of 22,526 or thereabouts, as was being hinted at by the GIFT Nifty. The Nifty Bank Index, of course, at that 47,500 mark, a good near 400-point kind of an up move coming in there. If you look at the broader end of the markets, there's a fair bit of strength there. Look at the mid-cap index is up nearly 1%. Let's also pull up the small-cap index and see how it's faring. Of course, gains in excess of 1%. The advanced decline ratio on the BSE, clearly in favor of the gainers. If you look at some of the other sectors, let's see what the auto pack is doing ahead of the March sales data. 0.7%, kind of gains coming in there. Remember, autos, realty, PSU, banks, in fact, PSU, the entire PSU pack, were the clear winners as far as FY24 is concerned. Pharma pack also fairly buoyant, looking in good health, 1% kind of an uptick. Nifty IT up 1% or thereabouts. So all in all, sectorally, we have seen most of the sectors trading in the green. The realty pack also standing tall, 1.3% kind of gains coming in there. Let's take a look at some of the gainers on the Nifty then. Hindalco, JSW Steel, Tata Steel. So top three gainers from the metals pack. Hindalco gaining in excess of 2%. You have the Adani Ports as well. This was one of the clear winners of FY24 as well, among the top 5 performers on the Nifty for FY24 today as well. Has started on a strong note. Among the top gainers, Bajaj Finance continues to extend its up move. Even Bajaj Finance, want to see what that is doing, given the fact that the stock had hit, multi-month highs last week. Losers are few and far between, just about 2 losers on the Nifty, Bharti Airtel as well as IndusInd Bank. So all in all, the texture looking very good. We are knocking at fresh highs, almost at 22,500 as we speak. Let's see whether or not we manage to hit a fresh high in today's session. So FY25, of course, starts with a bang where the market is concerned. But on that note, let me also bring on board, our fundamental guest for today. Joining me is Asutosh Mishra of Ashika Stock Broking. Great to have you on the show, Asutosh. FY24, as we all know, 30% kind of gains on the index. FY25 has started with a bang. But in the last 2 months, we've seen the trend reverse, when it comes to the index as well as the broader markets, right? With Nifty mid and small caps seeing some bit of correction. Would you call this correction, some bit of a cool off in a bull market? And does this give us or give investors an opportunity to nibble into quality stocks? How would you read into the trend reversal in the broader end of the markets and the index?
Thank you for inviting me first. And if you look, I totally agree with you that this is more of a small blip in the overall movement of the market, and this is more, we can take this as more as an opportunity. If you look just as earning growth for the next year, earning growth for the FY25 is expected to be far better than the FY24, and that's clear will be moving in a right upward direction. Yes, we know that value not at a very comfortable level at this point of time compared to the global context, but given the growth which we are delivering, we will be continue to trade at a premium valuations, and that's why this is the correction which has taken place, especially in mid and small cap. This is more of an opportunity to add good quality growth stocks in our portfolio.
All right, correction offers a good opportunity to add quality stocks to our portfolios. But I want to get in your thoughts on an Infosys. How are you viewing this stock? Given the fact that the company has said that it stands to receive over 6,300 crores as a tax refund from the IT department. Of course, it also faces, some 2,000 crore worth of tax for FY23. The company is still assessing the impact on its financials, but of course, we are knocking at the fourth quarter earnings season. Q4 is expected to mirror what happened in Q3 with respect to IT firms. So, how are you reading into this development with with respect to the tax refund, and what are your expectations in terms of guidance from Infosys?
So definitely, tax refund is a positive for the company. It will have a one-time positive impact on the company. But we need to look more on what is happening on the IT sector as a whole, in especially US market. So if 2-3 things is important for us. Although if you look at Accenture's guidance, especially on the such Infosys operate was not so good, so market was a bit confused about that part of it. But when we look at the US economy continue to grow at a very, very robust pace, and the new IT contracts are coming up. If you look, deal wins for the last year was quite good, and overall, if you look at we are also seeing very low attrition rate, which has helped them in the way of containing their cost and improving their margins. So in my view, FY25 is going to be relatively better than what market is expecting for the IT sector as a whole, and the larger IT company will continue to do quite well. And within a whole IT space, scope for some of the mid and small cap IT companies is also very good, because they are operating some of the niche segment, which is growing at a relatively higher pace than the overall market.
Of course, FY25 is being billed as in fact, it is being expected to be a year of recovery for IT names. But let's shift gears and talk about the auto stocks, right? Auto sales figures will be trickling in for the month of March. Two-wheelers are likely to be in the fast lane. We've seen the top, 3 out of 5 top performers for FY24, belonging to the auto names, right? As I mentioned, two-wheelers likely to be strong, and so is the case with passenger vehicles. But tractors, of course, likely to remain in the slow lane. But, would you say that all the good news, is already in the price for both the two-wheelers as well as four-wheelers? What is your preference in the auto pack?
So in auto, I think some cool off may take place in FY25. Simple reason is that pre-general elections year, normally we see a very strong uptick in the auto sector. This is combined with the economic growth which we are delivering at this point of time. So the base is quite high for FY24. So on this base, delivering a strong growth in the next year we need to watch out for how this happens. But the one space within the auto sector which I am quite positive is CV sector, which we clearly see that the type of economic growth which we are seeing, the type of road networks and overall trend in the logistics which we are witnessing it, probably CV sector will be doing relatively better than what they have delivered into the FY24 in FY25. And passenger vehicle still I need to work more on to try to see it, because there are mixed trend coming in, especially passenger vehicle and two-wheeler is more disrupted because of the EV part of it. So we need to see how really that's pan out in the part of it. But CV, which is not being disrupted by either the EV trend or other, looks quite good for me. Tractor still, I think it will take first half is not expected to do quite well, and probably post that how the monsoon pan out, we will be going to see that what will be the trend for the tractor industry as a whole.
Just want to get in your thoughts on Bajaj Finance as well. Reports suggest that it is looking to unlock value and come out with an IPO of its housing finance arm. Of course, the stock was stuck in a downtrend, until recently, on the back of regulatory concerns. But now, since we saw the stock hitting multi-month highs last week, do you think that the worst is over? And Street, of course, has also turned a little bullish on the stock, right? So, do you think the worst has already played out for Bajaj Finance? All right, we'll come back. I think there's some issue with, Asutosh's link. We'll get him back. But Aamar is waiting by. Aamar, your thoughts on Bajaj Finance? Cooling off a bit today, but the stock hit multi-month highs last week. I think it clocked in, 6 or 7 consecutive sessions of gains. Here on, what are the targets you are setting on a Bajaj Finance? 7,500 on the cards?
Yeah, see, this is one stock which really has not performed over the last year or so. It's been clearly in a consolidation. And as you rightly said, the stock did correct towards 6,200 levels. And then again, we're witnessing some pullback over the last 6 to 8 trading sessions. I would say the stock on the long-term charts also really doesn't inspire much confidence. Yeah, we could see a pullback towards the 7,500, 7,600 levels, or maybe 7,800 levels. So it's more of a consolidation. It's a stock very good for trading from a trading perspective. So anywhere between any correction towards 6,200, 6,300, that's a 65. That's a good buying level. Any profit booking is around 7,500 to 8,000 levels. So because on the long-term charts there is no trend and there's not a likelihood of any trend materializing in the short term till the stock sustains above the 8,000 for a major upside rally. Otherwise, it's in for consolidation.
Okay, hold that thought, Amar. I think we've got Ashutosh back. Ashutosh, I was asking you about, how Bajaj Finance was stuck in a downtrend in the wake of regulatory concerns. But of course, the stock has been doing well. It has come off its lows. In fact, it is back above that 7,000 level. But do you think all the negatives are already in the price when it comes to Bajaj Finance? And should one look at accumulating this now?
So, if you look, Bajaj Finance, the stock has started again participating when the news of listing of its subsidiary Bajaj Housing Finance comes into and that is a big trigger point out there. That the subsidiary of Bajaj Finance is doing quite well, and the listing will unlock the value into the overall organization. So that's a big positive, and that has helped the stocks to sideline some of the negative point, especially on the regulatory front, which we are seeing it. Regulatory part, we still need to see how things get cleaned up. But given the track record of Bajaj, we clearly see that they will be able to come out of this scenario much more stronger out there. Only thing which we need to walk, at least for the first 6 months of this year, is that what type of growth and at what cost of fund they are able to deliver this whole growth out there. These two things will be very important to watch out for. And given the listing of Bajaj Housing Finance is now being under consideration, so that will continue to keep the stocks in a positive territory going forward from here.
What are your thoughts on HDFC Bank now? A couple of developments. The company has increased its home loan rates. In fact, cumulatively, it has increased it by 35 basis points if you consider Jan to March period, right? But given the fact that the RBI governor had also hinted in the last policy that he wasn't happy with the pace of transmission, do you think other banks will follow suit? And secondly, expectations from the RBI policy? That's, the announcement is due on Friday.
Yeah. So HDFC home loan rate is a bit different compared to what other banks are. Simple reason is because of the merger, they have got this realignment of the old the portfolio which they have received from HDFC Limited with the banks, current external benchmark rate or MCLR rate of the bank. So it is totally different dynamics in the case of the HDFC Bank. So we cannot take this as an industry trend out there. Overall industry, we are still saying that there is no uptick in the housing loan rate in the last few of the competitors has cut rate by 5 or 10 basis point over the last 3-month period or so. And yes, there is some concern from the RBI perspective on the transmission of the rate to the end borrowers, and they are working with the banks on that front. Yeah, what was your last question? I just forgot. Yeah.
Your expectations of the RBI policy, of course, the central bank is expected to hold fire this time around as well. But any expectations of any kind of tinkering with the stance? Would you expect that, or do you think that will also be at withdrawal of accommodation?
No, I don't think so. There will be any tinkering of the stance at this point of time. Two things is very important. One, when Federal Reserves move. Number two, how our monsoon do. So one of those things has to happen. Okay, after that only RBI will move. So I expect RBI to move somewhere in August policy meet, not before that. Probably by that time, Federal Reserves will also decide upon whatever 1 or 2 interest rate cut which they are discussing about this financial year, this calendar year, and we will have a much better figure on the monsoon in our country too. So these two is a very important point to look from the rate perspective. Till that point of time, RBI will continue to hold up the rate as well as policy stance.
All right, that's the view then. But with that, I'm afraid we're running out of time, Ashutosh. Thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Look forward to having another conversation with you pretty soon. Well, with that, let's go back to Amar and, let's address some of the viewer queries that are trickling in on our live feed on YouTube. Starting with Global Spirits, the stock is up 7%, 7.5% right now. Of course, it has been stuck in a downtrend. If you look at the monthly charts, YTD charts, Even the last 1 year hasn't been anything to write home about, but the kind of pop that it's witnessing today, do you think, the stock has been in an oversold zone and now the signals are turning, or how are you reading into this up move today?
Yeah, I would say that the stock, if you go back in time, the stock has halved from its all-time highs. So it's around crucial support zone. So yeah, those who want to take a risk, counter trade, means counter trend trade, this is a good level because the stock has got very strong support coming on the 650, 660 zone. That is very unlikely to be breached. If that is breached, then the stock could witness some further correction. So keeping a stop loss below 650 can be a buying opportunity. One should look at exiting or booking profits around the, I would say, first level is around 750, 760. If that's taken out, then the stock could witness rally towards 800 odd levels. But one needs to remember that the intermediate term trend, the long term trend for the stock still remains down since it's around major support zone. So we could expect a pullback, but that's it.
All right, that's the view on a global spirits. I hope that answers your query. The next one is coming in from Vignesh, and he wants to know your thoughts on, Happiest Minds. Now, this stock has also been stuck in a downtrend. He has 300 shares at the rate of 933 rupees a piece. Of course, he's making a bit of a loss here, over 200 rupees. He wants to know if he can average at these levels, or he should still wait for more downtrend to accumulate. He doesn't want to sell it. What would you advise him to do?
There's one advice I'd like to give, that we should, as far as possible, avoid averaging in a downtrend because the stock could correct further. But having said that, just like I spoke about global spirits, Happiest Minds is also very close to its major support zones. So if I look at the charts from a long-term perspective, I see that the current levels, so somewhere anywhere between 700, 750, that's a very strong support zone, which the stock is unlikely to breach unless we see a major sell-off across the markets. So having said that, the stock could witness some bounce back from the current levels towards 800. The first level you need to watch out is 800, 810 levels. If that is taken out, then you could expect a rally further in the stock towards 840, 850 levels. Otherwise, the trend of the stock remains, I would say, I would not say it's down, but it's more or less in for consolidation.
All right, the stock is in for consolidation. The next query is coming in from Alex, and he wants to know your thoughts on Bharat Dynamics. Now, this is one of those stocks that PSU stocks that have seen some bit of correction after a phenomenal run, right? So if you look at the charts of BDL, it has cooled off. 1 month chart shows a 5% decline. But should one use these declines to get into these, some of these stocks like Bharat Dynamics, HAL as well, for that matter? How are these, defense names looking on the charts now?
You see, Bharat Dynamics continues to be very strong on the charts. So Bharat Dynamics continues to be very strong on the charts from a long-term perspective. Intermediate term perspective, we are seeing some sort of consolidation. So I would say that at the current levels, one shouldn't really get into the stock because the stock is in a no man's land. So if I look on the upside, the stock has got resistance around the 1850 zone. If I look at the downside, the stock has support around the 1700 zone, 1650, 1700. So it's more of a trading range. But on any significant correction, this is a stock one can definitely look at adding to one's portfolio because the long-term trend remains very strong. Talking about the other stock, HAL, which you mentioned, Hindustan Aeronautics, this has a different, I would say, structure as compared to Bharat Dynamics. This continues to be very strong on the charts, on the intermediate short term as well. So, but I wouldn't recommend buying at the current levels.
All right, not recommending a buy at current levels. But before I move on to the next query, I want to get your thoughts on an RVNL. The stock is up and about today. Of course, it has emerged as the lowest bidder for a railway project worth 148 crore rupees. In fact, last week it has emerged as the lowest bidder for 3 orders, in a single day last week, of course. The stock is, of course, up over 200% in the last 1 year. Within the railway basket, would you prefer an RVNL or would you look at other stocks that are looking more attractive on the charts?
So RVNL again has a similar structure as compared to Bharat Dynamics. So what it effectively means is that the long-term trend remains strong, intermediate-term trend, short-term is more or less consolidation. From a short-term perspective, we've seen some good volumes in RVNL over the last 8 to 10 trading sessions. So that tells me that there is some buying interest which is coming from smart or the savvy investors. The levels to watch out for the stock is around 265, 270. If that is taken out, then the stock could rally towards the 300 level. So that's the level to watch out for.
All right, that's about RVNL. But just a couple of more queries to go. Satya CK wants to know your thoughts on a Sterling Tools. It's trading at somewhere around 316. Just has it's just about come off its 52-week lows of 309. If you track this stock, of course, the stock has not been doing well. If you look at monthly, 6-month YTD, all the charts show red on the screen. 14% down over the last 1 month, but today it has seen some bit of traction. Is this worth looking at, or would you call it an avoid right now?
See, my advice generally is that get into stocks which are in an uptrend rather than trying to get into stocks which are in a downtrend. This is again one stock which has not really performed. The stock has corrected from almost 450 levels, currently around 320 odd levels. But the stock is around close crucial support zone. So what will happen is that you can expect a bounce back in the stock. So if you want to enter, you can enter, but you need to exit also fast. So the levels to watch out for is 340, 350 on the upside. That's a level to watch out for. On the downside, the recent. So any stop loss below 300 is what you should have. But towards 350, 340, 50, that's a zone of resistance. If that is taken up, then you can expect the stock to rally towards 355, 360 level. So that's, you need to always consider whether the stock is in a secular uptrend or a downtrend. Getting into a stock which is in a downtrend, you have to be faster in execution.
All right, that's the view on Sterling Tools. But Aamar, I just want to point out that we have hit a fresh high in today's session. The fresh high now stands at 22,529.95. Of course, right now we are trading around that 22,520 mark. But here on, what are the targets you'll be watching out for on the upside? 22,600, a possibility this week itself?
If you look at the derivatives data, so that overall tells me that from today's perspective, that overall looks at positive on the positive side. However, we look at the futures data, so there we are seeing some sort of, I would say, unwinding in positions in the OI. So because a lot of shorts would have got trapped, so we'll have to watch out for the current level. So at 22,500, 550, that's a zone of resistance. I would say if it sustains about 22,500 and 550 levels, then we could expect a sharp rally towards the 22,650, 22,700 levels.
All right, but towards the end of the session, like what we saw on Thursday, do you expect some bit of selling pressure to kick in the second half? And what should be an ideal F&O strategy for the next couple of sessions?
Yeah, I would say the RBI policy is also due. So I would say markets would be looking at that, and particularly the banking stocks would be more closely watching out as to how that. But more or less, markets have factored in that there isn't going to be any change. But the statements of RBI going forward, that's going to play an important role. So that's something which the market. So there could be some profit booking happening or some lightening of positions could happen. As far as the strategy that one needs to keep in mind, at least for the next couple of days, is on any correction towards, I would say, if I look at Nifty, the levels to watch out for is somewhere around 22,300, 350. That's a zone of support. So any pullback towards those levels could be a buying opportunity with an upside target of towards 22,500, 550 levels. So not at the current levels, but on any correction, one can look at a buying opportunity. Because Nifty's got very strong support coming around the 22,180, 22,200. So buying on any correction is what one needs to look at least for the next couple of days ahead of the RBI policy.
All right, buy on dip should be the strategy ahead of the RBI policy. But can't not ask you about the metal names, especially the steel names like JSW Steel, Tata Steel. We've had the China manufacturing data come in, the Caixin PMI, as well as the manufacturing PMI that came out over the weekend. So both of them are hinting at very strong activity on the factory output front, right? Which is why I think all these metal names like JSW Steel, Tata Steel are rallying today. Any trade that you're spotting in the metal basket, especially the steel sector?
Yeah, I would say Tata Steel is one stock one can definitely look at, consistently sustaining over the 160, 162 levels. the stock could rally towards the 170-75 level. So this is one stock one can definitely look at.
All right, that's that then. Also, since I am reading a query on Jio Financial as we speak, Nias Basha wants to know your thoughts on where Jio Financials is headed. How are you viewing this stock on the charts? What should be the strategy here with respect to, medium term or long term perspective?
See, the long term, there's not much of, excuse me, I got a bad throat. So from a long term perspective, there's not too much of data to look at. But having said that, if you look at from an intermediate term perspective, the trend remains strong and firm. But the stock had made a high of 375, currently it's around 360 levels. So one shouldn't enter at the current levels. Till the time we see the stock sustaining above its all-time highs, then the stock could rally towards the 400 and 420 levels. And the downside, the stock has got good support coming around the 340 odd level. So any entry is towards the 340 levels rather than entering at the current levels.
All right, look to enter at 340 levels. That's the view from Aamar. With that, of course, we've come to the end of the query segment and the show as well. So, Aamar, want to take this opportunity to thank you for taking out time and joining in this morning, and advising all our viewers with respect to their holdings. Of course, look forward to connecting with you sometime soon again.
Thank you.
But with that, as we leave, for the day, of course, the Nifty hit a fresh high of 22,529. We started FY25 with a bang as well. But as I mentioned at the start of the day, we are looking at a data-heavy week, in terms of global news flow as well. And of course, the RBI will be announcing its policy decision on Friday. So, we will be watching out for that as well. But for now, in fine fettle, broad end of the markets looking strong, headline indices hitting fresh highs, and mostly all of the sectors are trading in the green. So good going for the market. Started FY25 with a bang. Let's see whether or not we manage to hold on to this momentum towards the end of the day and end the day at record highs as well. But with that completely timed out on this edition of Opening Bell, I'll be signing out now. Thanks a lot for tuning in. Of course, keep sending us your queries. We'll have them addressed, by our experts as well. And you have a great trading day, and come back and join us on Closing Bell at 3:30 p.m.